Welcome to Woods of Stardon. This is CH. I will be covering the LionGlobal Japan Growth Fund in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. LionGlobal Investors is a Singapore-based asset management business that was rebranded in 2008 from Lion Capital Management and is the result of the merger of the asset management businesses from OCBC and Great Eastern in 2005. OCBC is the second largest banking group in Singapore, while Great Eastern is the largest and oldest life insurance company in Singapore and Malaysia. Great Eastern and LionGlobal Investors are both subsidiaries of OCBC. LionGlobal Investors currently has about 78 billion Sing dollars of AUM, with core competencies in long-only mutual funds and ETFs across fixed income, equities, and multi-asset solutions. Given the nature of the setup, there is a notable tilt in the product offerings towards servicing OCBC retail banking business and the private banking business under the Bank of Singapore or BOS entity. LionGlobal Investors also has several collaborations with other local and overseas financial firms to launch market or thematic focused products. The LionGlobal Japan Growth Fund is a sub-fund under the LionGlobal Investment Funds II fund family. The fund family is set up as a Singapore umbrella unit trust. The fund is registered as a MAS authorized scheme, which means it is suitable for retail investors. The LionGlobal Japan Growth Fund indicates on the fund webpage Wee Ban Yu as the manager of the fund. Ban Yu is the head of the Japanese equities and lead country specialist for Japan, with over 25 years dedicated to covering the Japan equity market. The fund prospectus additionally names Andrew Koh as the co-manager for the fund. Andrew is an analyst in Ban Yu's team focusing on various sector-specific coverage for the Japan equity market. Morningstar indicates that Ban Yu has been managing the fund since 2002, which is more than 2 decades ago. There are, however, no additional information available. The LionGlobal Japan Growth Fund has a pretty straightforward investment objective, that is to provide long-term capital growth by investing in Japan-listed equities. The fund prospectus provides more details. Here, it states the fund focuses mainly in mid to small market cap companies, with no specific industry or sector biases. It is also stated that the fund actually is style neutral. So while the fund name has a growth in it, the fund doesn't necessarily invest in growth style stocks. There are quite a bit of details provided for the investment process. Much of it is related to the stock analysis and stock selection process, whereby the key analysis factors are listed. This is combined with top-down macro views to build in sector and thematic considerations in the portfolio construction process. The fund has a defined benchmark, that is the Topix Total Return Index. It is used for performance comparison, and the fund is unconstrained by the benchmark in terms of portfolio construction. While it doesn't state that the fund has an objective to outperform the benchmark, it is natural for investors to assume so. The LionGlobal Japan Growth Fund was incepted in 1999 for its Sing dollar unhedged share class. That should make it one of the earliest Japan equity fund available in the Singapore market. The Japanese yen share class was incepted many years later in 2014, but still has a decent decade-long track record for us to run performance comparisons later. Given its long history, the fund AUM at slightly over 300 million Sing dollars looks quite small. This is obviously partly due to the fund being a Singapore domiciled product, which limits demand from non-Singapore investors. The fund fact sheet provides sector allocation breakdown. where we can see the portfolio is heavy on industrial and consumer and financials. However, there is no benchmark data in the fact sheet, so we can't tell how different this is from the broad markets. So what we can do is to use Morningstar to get a consistent set of sector breakdown data of the fund as well as a topics ETF, in this case from iShares, to take a look at the differences. From these numbers, we can tell the fund actually is still quite similar to topics sector-wise. The biggest differences are slightly higher technology and slightly lower basic materials, which each having less than 2% variation. As we look through Morningstar data, it is also clear that while the fund claims to want to focus on mid and small cap companies, the actual fund is still very much a large cap focused portfolio. It is somewhat disappointing that the fund's investment strategy and actual portfolio don't tally. Financial measurements wise, the price ratios also look quite similar to topics, but the sales growth percentage and cash flow growth percentage are noticeably better. Book value growth numbers look odd and might be wrong, so I would ignore that. The fund has about 200 holdings in the portfolio, which is significantly smaller number than topics of over 1,600 stocks. As we now figure out the fund is actually a large cap fund, it is inevitable to see 8 out of 10 stocks in the top 10 holdings of the fund are present in the top 10 holdings in topics. The good thing is that the fund's top 10 holdings comprise only 24% of the portfolio, so it seems the fund is still decently diversified in terms of portfolio weights instead of having single name concentrations. As mentioned earlier, the LionGlobal Japan Growth Fund was incepted in 1999, with the first share class being the Sing Dollar Unhedged class. The fund then subsequently launched US Dollar Unhedged class in 2004 and the currency hedged share classes as well as the Japanese Yen class in 2014. All the share classes are accumulation only, so this fund is not suitable for investors looking for income through distribution payouts. The fund currently offers only the A retail class that has a 1.4% management fee. Adding other expenses gives a total expense ratio or TER of 1.55%, which is a similar fee level compared to other retail equity funds in the market. Up to 60% of the management fee can be paid by LionGlobal to distributors as trailer fees. Distributors are also allowed to charge up to 5% subscription fee for this fund, although I think anything more than 2% for mutual funds is excessive. The LionGlobal Japan Growth Fund fact sheet provides a cumulative performance chart since incepting in 1999 that looks good compared to its benchmark, the Topix Total Return Index. This is however referring to the Sing Dollar Unhedged share class, so it may be a bit confusing how FX movements affect the performance over time. The fact sheet fortunately provides a performance table for all its 5 share classes that allows us to easily compare their returns over time. As usual, we will ignore the lines that comes with the max subscription fees because that is irrelevant to the actual fund performance. We first take a look at the Japanese Yen share class because it is the native currency and therefore should best represent the performance of the fund without any currency impacts. From the table, it shows that the fund has underperformed the benchmark slightly across all time periods, which is not ideal. On a side note, it can be seen here that the Japan equity markets, as expressed via topics, has been doing really well with about 10% per annum return in the past 10 years. Next, we take a look at the Sing Dollar Hedge and US Dollar Hedge share classes. As Japan has been running a zero interest rate policy for years and is still extremely low currently, there is a positive currency hedging effect for both the Sing Dollar and US Dollar Hedge share classes, resulting in another 1 to 2% per annum returns for the past 10 years. The Sing Dollar Unhedged and US Dollar Unhedged share class, on the other hand, suffered significantly because the Japan monetary policy kept weakening the Japanese yen in the past decade. Therefore, investors would have had very different performance results going for currency hedge versus currency unhedged classes when it comes to Japan equity investing. Regardless, the easiest way to assess the fund's performance is to compare its Japanese yen share class returns versus the broad markets. where in this case, we can use the iShares ETFs for topics and also Nikkei 225 that are both popular indices for the Japan equity markets. In this 10-year Morningstar chart, it can be seen that the fund has been tracking topics quite closely through the years. There was a period of outperformance during COVID times, but the fund had thereafter been underperforming slightly. In contrast, Nikkei 225 has had a better but more volatile return in the past 10 years. The underperformance is more obvious when we zoom in to past 5 years time period. In this case, the fund was actually tracking more closely to Nikkei 225 until the most recent few months. The higher fee structure of the fund obviously drags down the returns, but more so, this shows the fund definitely needs to improve its performance to at least deliver some alpha versus the broad markets, or otherwise, it is not a compelling product for investors. Let's compare the fund with other solutions in the market. In US dollar terms for the past 10 years, the LionGlobal Fund looks to be average in performance versus most active mutual funds. Investors are better off going for Wisdom Tree Japan Hedge Equity ETF or East Spring Japan Dynamic Fund purely on performance basis. Sing dollar wise, there are less Sing dollar hedge solutions available with a long track record. Here is a comparison chart of the LionGlobal Fund versus offerings from Amova and East Spring. The eventual returns are similar, with East Spring slightly better than the other two. Last but not least, just to highlight again the big difference in performance between the hedged and unhedged share classes. Here, it can be seen that investors that have gone with the Sing dollar unhedged class would have lost a significant amount of returns compared to going for the Sing dollar hedged class from 2022 onwards. With that, let's summarize our findings. LionGlobal Investors is an asset management business under OCBC. While the overall AUM doesn't look too big, it does get ample support from the wider OCBC businesses. The fund is managed by Ban Yu, who is the head of Japanese equities and lead country specialist for Japan, and with over 25 years dedicated to covering the Japan equity market. The fund seems to be a bottom-up focused investment approach, with some details provided on the stock selection criteria and investment process. Information on top-down macro impact to the portfolio construction is minimal though. The fund, however, also stated in the investment strategy that it focuses on mid and small cap companies, but that has not been evidenced in the actual portfolio that still looks very much like a large cap exposure. On that note, the actual portfolio construct is highly similar to the benchmark that is the Topics Index, making it hard for investors to understand and appreciate how the fund tries to generate alpha. For a fund incepted since 1999, the AUM is relatively small at around 300 million Sing dollars. This suggests that the fund either has not been promoted enough by LionGlobal or has not been as good as other competitor funds performance-wise. Share class-wise, the fund offers currency hedge and unhedged versions for both Sing dollar and US dollar classes, which is good. As mentioned earlier, currency hedge versions look to be a safer play in the current market condition for Japan equity investments. The fund, however, offers only retail A share classes currently, so investors do not have any options for lower fee share classes. One way to get around this is to look for distributors that rebate back the trailer fees to investors. For a fund that seems to be confident in its stock selection process, performance has been rather disappointing as the fund has been average when compared to peers and has also not been able to outperform the benchmark Topics Index in the past decade. The fund definitely needs to improve on its returns to be more attractive to investors. In conclusion, while this is probably one of the oldest equity funds available in the Singapore market, it has unfortunately not exhibited enough portfolio differentiation compared to Topics or generated a strong performance to attract investors. This concludes my absolutely biased comments on the LionGlobal Japan Growth Fund, and I hope it will help in your investment journey. May we all grow wiser and prosper.